Hello everyone, welcome to our morning briefing. I'm Andrea Pihidi, market analyst here in Hot Forex. So, what we have seen overnight is that the stock markets tried to recover a bit. So, this is in contrast, of course, with the beginning of the week. It seems that this time President Trump's Twitter and his comments have not alert the risk of sentiment, but instead they spread some hopes all over the global. So as he mentioned, he had a very good dialogue with China this time, and he believes that the trade talks won't collapse and they will actually reach to a deal. On the other hand, however, he criticized once again Fed. So he said that they should do what China is doing, and we assume that he's pushing for further stimulus measures. So on the other hand, we have seen China data this morning. So this morning we actually had industrial production, retail sales out of China. So data disappoint once again. They indicate another slowed month, and this again, along with the fail-out of tariffs, of tariff hikes, adds further to the scenario of a further stimulus from China. So this actually. This actually gives the impression to markets, or not only the impression, actually the belief to markets that China will follow further stimulus measures. So other than that, it was quite interesting to see oil going lower, being under pressure, along with the Aussie. Those two assets were the main drivers overnight. So Aussie was pressured by the weak data. We can see this that it's been in a decline since last week. Let me put the 1 hour chart. So Aussie was pressured also by the Chinese data, as already said. Currently 0.6925. Immediate next intraday support just 4 pips lower. However, in the overall picture, there is, you see that this is an empty space over here. There is nowhere to claim that we have a support, an immediate support. So next level to be watched is the edge of the Bollinger Bands at 0.6869, or even the low that we have seen on December 2018. Also, U.S. oil, we've seen U.S. oil struggling a bit, and that has to do with the stories out of the American Petroleum Institute that reported that will increase by $8.63 million the U.S. stockpiles. So currently, U.S. oil is at 61.30, struggling to push to the upside, but also we have a lack of direction this time. So in the intraday, it's like bouncing up and down, a consolidation. But other than that, support is at the around 61 level, while resistance remains 61.60 days high. Above this area, the next support comes over here close to 62 and the 200 moving average. Let's shift back to our main pairs. Euro-dollar spike lower after the into the European session. Tried to reach the 112. However, the bulls are trying to push higher, but we don't know exactly where this is going. There was some positive momentum earlier today, overnight. However, this didn't last, came lower, but now struggling around the 20-period moving average. We had the German GDP growth earlier today, expanded. Came out in line with expectation. That was positive. It seems that that despite the weak manufacturing sector in the Germany and in Europe in general, there was some good progress, some positive signs in the construction area and in general in the domestic demand. So consolidation in the euro dollar. Resistance holds over here at 112.15, support 112. That's quite a strong support. So let's wait and see. The closing below this area could lead to last week's lows, while a break of 112.14 could shift further the pair to the upside, and the 20 period moving average in the 4-hour chart around 10 pips higher. So other than this, let's last but not least, let's go back to pound 128.90. Another weak pair. After Aussie might be the weakest so far this week. So the next real support, on the break of the round 129 area, the next real support is at the at last month's low and the 128.65. That was before the rebound we have seen in April. So just 40 pips lower. That was for cable. And that's it. So on the oil weakness, we have seen dollar CAD pushing higher. CAD has been weak against dollar. It's pushing higher. Currently, it's at 134.70. The next resistance for CAD is at is 10 pips higher and at the 134.85. That's 2 days highs. So that was from us so far today. The next important events that you have to take care of for the rest of the day is, of course, gross domestic product from Eurozone in a bit, and also retail sales out of US and inflation data out of Canada. Thank you for watching and see you later on. Bye-bye.